What's up everybody? Tom here with another video. In today's video, we're talking about why this chart is the most important for you to be looking at in the markets right now. We'll also be talking about our technical analysis levels for the SP 500, Nasdaq, Bitcoin, Tesla, and more. Tesla just had its earnings and that kicked off super earnings week in the stock markets. This is just getting started. Stay tuned. So guys, as we always do on this channel, let's take a look at a heat map for yesterday and talk about what happened in the market. So we had Tesla moving up a little bit throughout the day into the back end earnings. We had Amazon coming out with a 2% day. We had Nvidia and some semiconductors doing well, and payment companies such as PayPal, Square, etc. did very well with Bitcoin's recovery. So there was a lot to unpack, but before we go into anything else, I just want to mention, of course, this week is super earnings. And I don't know if I've seen a more stacked card on earnings for quite some time. We've got AMD, Microsoft, Pinterest, Google, everything's coming out after the close on Tuesday. Join us pre-market to talk about all these stocks and where the technicals are at 1.5 hours early before Tuesday morning. Then we've got Apple, Facebook coming in. We've got Qualcomm, Teladoc. I mean, does it get any bigger? eBay, etc. on Wednesday. Then Amazon, Neo. I mean, it's just a phenomenal week of earnings. And we're very clearly going to have an idea of what the market expects after these big ones come through. Once they go, you'll see all of the other big tech start running with it because Microsoft and Google will lead the way on all other technology companies. That's just the way it's always been. But we've just had Tesla earnings. We'll talk about that more soon. We'll talk about some interesting things they've changed in the earnings reports. And I think that this actually bodes relatively well for the report overall, and we'll talk about that soon. Yesterday, what was going on? We had a slight recovery. We actually started off very strong here in the Russell 2000. Then the Nasdaq, SP 500, and Dow Jones came pretty well into the end of the day. Of course, the Dow was the weakest, as most interest has been in the tech sector, semiconductors, payment companies, etc. When we go through the actual sectors, you'll notice energy recovered, materials, one of our favorite sectors, and then of course consumer discretionary and technology. They were all leading the charge, while at the same time we had XLP really down here in the lows. That's the consumer staples, the more defensive components, utilities and staples, usually the defensive points. So where are we at with Q1 beatings earnings data? We're at 90% beat rate. Of course, we're looking at core business growth, though, is the most important thing. We saw Intel and Netflix miss on that. And of course, that led to some sell-offs in those stocks. But I'm really laser focused on this concept. We've been talking about it a lot. Yes, I know I keep bringing it up, but that is that we are following a very similar game plan to what happened out of the GFC. Now, if we go on to a new high here, which it looks like all these earnings are going to be good, the market's looking pretty hot, everyone's getting super euphoric again, then we might see a new high and then still possibly a sell-off as we're too far away from certain moving averages we talked about in our weekly video. We're starting to get to the point now where we need to be optimistic always in the markets, but we also need to be cautious with the positions that we're loading into the markets, as it just starts to make me think, oh, you know, maybe everyone's a little bit too excited. And this chart probably is where it all starts. Put call ratio here, yesterday's close, 0.657, one of the lowest readings we've seen some time. And what does this mean? Huge amount of calls have been opened yesterday in the market. Anticipation into this week of super earnings. People are buying calls. People are not buying protection on any position. Everyone's euphoric. And while I still think this week's going to be pretty positive, this is a similar type of thing. It's all playing out very similar to what happened last time and into Wall Street's game. If this holds down in the 0.6s again for another day, you know this is generally a relatively bearish signal. Now, earnings will rule. Then we'll find out what's happening with the technicals. But 0.657, it plays into the game of Wall Street laddering in their puts, allowing huge amounts of calls to come through, and then of course leave the retail community holding the bag at the end for their little correction games. Let's now go over to the dollar index. Of course, the US dollar is very important to be looking at here. It's still quite weak. We got a 2050 cross now on the daily. We go down to the 4 hour and you'll notice it's at the 20 moving average. So it's generally been selling off somewhere around this zone all the way on the way down. It's been very, very technical. However, I do think that we've kind of reached a point where around this 91, you're going to see some consolidation. So all the easy money, especially the money that was made between 92 and I think around this area, this 91.30, that was a very easy sell-off. Now we're in consolidation, a bit more kind of difficult to trade. So we really go over more to the other opportunities. And what are the other opportunities? Things like gold. We're still in a double bottom here. The double bottom pattern, of course, consolidations here to 1825, take profit. And we've talked about this for a couple of weeks. But where are we now? Well, we're actually stuck between two moving averages. Notice this, the 20 moving average, the red line, and the 50 moving average, the blue line. We've seen this on a few stocks and a few commodities recently. This is actually coiling in between these two moving averages on the 4 hour. Now, if we get a breakout above, what happens? We go and test the resistance. If we get a breakout below, what happens? We go and test the support. So we're basically stuck in the middle of nowhere land on gold and therefore silver as well in the markets. And this is what we're going to have to be looking at. When we see a break either side, we expect a follow-on effect, at least technically, down to either the support or the resistance. If we break through, of course, the 1797, I don't think 1800 stops this thing. It's coiled before. Like normal TA that we do on this channel, that will push it into the 1825 and so on and so forth. So I'm pretty excited for gold, but at this stage, just sitting around in the zone. Let's move over to Bitcoin. Of course, Bitcoin had an amazing, miraculous recovery. We kind of predicted that this would happen. We were very comfortable in the fact that Bitcoin was coming through strong. There was a few great signals we looked at in the live stream last night, but we're coming up to a very important point, 55,000. 55,000 is not only a psychological level, every 5K matters in Bitcoin, but we've also got a 20 and 50 exponential moving average acting as dynamic resistance. So we'll go down to the 4 hour and have a look at this chart. So this is one that I was focusing on because I was laser focused on this particular stop hunt, kind of bullish hammer, pin bar, whatever you want to call it, that comes through here. This was a super interesting level. And when it flowed on, not the close, I didn't even need the close, but when I saw that market momentum flowing on, I knew that BTC was in, as in the bottom was in for that period of time. And we were going to move up to that 53 kind of 5 zone. We've now closed above 53.5. You can see at the time of this recording, we're at 53.842. And it makes me think that we're going towards the 55,000 land. I mean, it's been a miraculous recovery, even had a sell-off in it recently, followed by, a bit of bullish pickup. So imagine if we get a little bit of a high throughout today's session, throughout the next 24 to 48 hours. When that happens, it will trigger a bunch of purchases. Those purchases will go into 55,000. They'll test that moving average and we'll see really what this recovery is made of on Bitcoin. All alts are doing well. XRP is doing well. I mean, it's really, really, really good to see the market so healthy in the cryptos. And of course, Ethereum really came through for us, doing better than Bitcoin as we did expect on this channel. Let's now move over to some of the stocks and we'll start off with Tesla. So I had a look at the report and there's heaps to break down in that report. You got them selling some Bitcoin, making $100 million. You've got more credits coming in from the government, about $100 million. Then you've got one-time expenses on their S and I think X models, suddenly $200 million. Let's call them a cancel out kind of thing. But what I think was really interesting is that they're sandbagging their guidance. So they've said, oh, we're going to give you really broad guidance here. We're going to say, hey, we expect to ship around 750K vehicles. That's a 50% increase, guys, on our 500. That's what we're going to tell you. They shipped over like 250,000 in the first quarter. You can't tell me they're not sandbagging. And I think that's cool. If I was running a business and I wanted to surprise and deliver and really give retail, the community that's so strong and a very important investor, hey, I would do that. So I think this is a great move by Tesla. I'm very happy with their sandbagging. I think it's awesome. And there's no way that they really expect to ship 50% and only a 50% increase. They're expecting a much higher increase there on their cars. And I have a few, I don't know why they sold the Bitcoin. I didn't really look into that too much. But yes, if they sold the Bitcoin, maybe they wanted to kind of make their books look a little bit better. And I'm sure they'll be looking at adding to that at some point in the future. Who really cares though? The company's not a Bitcoin company. What it is is they're shipping cars. They've got all their other patents and everything else that's going on with the technology. And the Wall Street initially did not like this result. So they actually pushed it to what I saw, which was about 720-ish in the aftermarket. Wasn't a huge amount of movement. I think generally on most things, well, they beat expectations. They hit a lot of what Wall Street was wanting. But I think that sandbagging the earnings, or sandbagging more the guidance in the future, is so fascinating. I think Wall Street didn't know what to do about that one. So we're going to probably see a 720-ish open tomorrow. It looks like we know that's support. If that's where we see it, then of course we do expect buying pressure. I think a lot of people will be talking about this, and maybe a lot of people will be coming to the conclusion of sandbagged guidance. And if that does happen, we get back up to this 740, this evil 740, 745 zone. We know once we break through that, guys, that we're going to the promised land of 780, 800. We know that's where the resistances are, previous supports. We know we've been so good on these levels, and we've been laser focused in. Now, if we get underneath 720 for the day, where do we go? 700. We know all our levels. We're very comfortable with the levels, and we just have to see how the market wants to interpret it. Do they interpret it well, or do they interpret it poorly? I think it was overall a pretty good result, though, and very interesting on the guidance. Bringing GME and AMC back into the discussion here quickly today. I just want to talk about them because, of course, breakouts occurred, and I think that I probably should have put this in the weekend video. This daily here above $10 when it closed, that was all I was looking for on AMC. And that was a very strong candle. Now, it may look crap, and you may think, oh, Tom, that's a crap looking candle, but it's the close above 10 that was so significant. That led to a massive movement. Yesterday, we hit 11. We moved up to just underneath 12, exactly playing the same ball game as it did last time. It sold off just underneath 12. And of course, if you get above 12, what's the next level? It's going to be, in my opinion, somewhere around the $14-ish. So look, AMC is back alive. It looks like the juggernaut's there, and GME came alive for it as well. This one's super fascinating. We had a 173 resistance. We've hit it once, we've hit it twice. I saw all sorts of random levels being thrown out there today in the community, but I think 173, you guys know I've been all about that zone, and I think rightfully so. I was right here, we were right here together, and this was the zone that we wanted to break. Now, on the daily, so this is including the aftermarket, on the daily, we didn't break past 173. On the aftermarket, we got past that, and look, it went straight to the 200. It went just up to 198 pretty much, and then sold off instantly. So yes, I mean, if we break above 173 and we close, which is what I was really looking for, then we move to the 200. Then once we get past the 200, you guys can feel really good, because that's when it's really on for GME. We've got that kind of trough, peak, higher trough sequence here on something like the daily. You can see it here, trough, peak, high trough sequence would be in, and that would really be showing further strength. And I know there's a lot of public momentum that's getting behind these. Yeah, good luck everybody, and hopefully you do well there. Let's move over to the indices in our discussion here. IWM, the Russell 2000, broke out. We can see what's happening here. It's going towards the $230 price. And then, of course, the next level will be around 234-ish, which is the previous high over here. Look, great movement here from the Russell. It was rotated in, which is what we've been talking about. But really, we had to have the US 100 and US 500, specifically the SP 500, coming along for the party. Nasdaq right at resistance before the key earnings. Look at this. This thing's trading 14,032. It's like, please let me through. Please let me through the resistance so that we can go to the promised land of the full inverse head and shoulders completion at 14, just underneath 14.4. So will earnings get us through? Microsoft's been on a tear into this one. AMD's coming out. Google's coming out. Every one of those stocks, it expects a lot. Will it deliver? I think they're going to deliver super results. I've been thinking about that for a while, but I don't know. I don't know. Who knows? If you know, you're crazy. But what we do know is that price action is teaching us that the market is anticipating these results, and it's super optimistic and super excited to get through. The problem is it's still at resistance. We don't know. S&P 500 on the trend line still, really pushing up here and grinding higher. It's the same thing. We've got the 41.20 as our key support, where we know the market is going to go a little bit short for a little while, and we're right at the resistance. Look at this. We looked at this yesterday on the market, and we were just hovering there. hovering around that 41.90, 41.88 kind of zone, looking for Microsoft and Google. So next 24 hours is going to be everything here for the earnings. Will we go higher? Will we push through? Will we hit a 42.50 on the S&P 500? This is fundamentals week more than technicals week, but we'll be watching it and going through each one of the earnings as much as we can. So guys, if you enjoyed this video, please, as always, remember to give us a sub, hit that like, and of course, join us for the live streams. I'm so pumped for this week, and I am so excited to go through earnings. Microsoft, Google, what's going to happen? Oh, we just saw Tesla. I thought it was pretty good. I'm excited, guys. See you soon. I'm excited, guys, and we'll see you soon. Bye for now.